Good morning, everyone. Today is December 17th, and we here at Harvested Financial are looking at the markets. So thank you for joining us, and I appreciate everyone tuning in. But before we get started, of course, I need to give my brief disclosures that all of the information, commentary, and opinions expressed here on this or any other websites or social media platforms or in any other media format reflects the personal opinion, viewpoints, and interpretations of the employees providing such comments and are not to be considered a description or offer of advisory services by Harvested Financial. The opinions expressed are for general informational purposes only and not intended to provide specific advice or recommendations for any individual, any specific security, or any investment product. It is only intended to provide education about the financial industry and in no way in any content on this website meant to convey investment advice, performance data, or any specific recommendation to buy or sell securities. Harvested Financial employs multiple methods of analysis and security selection to create client portfolios, which are not discussed in their entirety here. All investments carry the risk of loss and users should discuss any decisions with their financial advisor. Past performance is not a guarantee of future results. So thank you again for everyone joining us here today. We are going to look at what is going on, and I apologize for missing everyone yesterday. We had some things come up here at Harvested, but we are back today looking at the markets, and one thing that is on our radar is ABNB. So they IPO'd yesterday, options are out. We're going to take a look at those. Another thing that I want to take a look at is MSTR. That is absolutely blowing up on some of this Bitcoin news. And if you'll recall our midday market shot with Lex over at Tradier last week, we were talking about exactly what would happen to MSTR stock if this Bitcoin rally continued. So we're going to look at that. But brief overview real quickly. We are topping out at all-time highs in the SPX. So SPY trading up $2 today. That's 55 basis points, topping out at 372.22 right now. So that's $1.50 over the high close last night. And we are also up in the Qs. We are also up in IWM. So green across the board, a lot of buoyancy in the market, and generally some really interesting action to take a look at. So I mentioned we were going to take a look at IPOs. Airbnb listed yesterday. So those options came out. Everyone was trying to scramble. How do we price the volatility in something new? If you recall, we talked about this with DoorDash on Tuesday, but pricing volatility in a new name is incredibly difficult, especially because they have options that are expiring just on Friday. That would be tomorrow. So I'm going to share my screen. I'm going to pull up my Trade Hawk for everyone here and show you just how kind of nuts pricing something like this is. So Airbnb is actually up $8 today. That's 6%. They're above their IPO price. So, we saw some real negative action in the first couple of days of trading. They've rebounded significantly and are coming up hot here. So looking at the 145 straddle, really interesting way to think about how much we expect this stock to move over the course of the next day. Let me clear that out. If I sell the 145 call and I sell the 145 put right now. So this is for the options expiring tomorrow. That is a 980 on the bid, 1010 at the mid to sell that straddle. So that's a $10 move that we're expecting just in the next day. Really interesting trick. I'm sure some of you have seen this before, but I'm going to pull up my trusty calculator and I'm going to do one of the trader's backhanded back of the envelope best methods for calculating how much we expect the stock to move on a given day. So I see 140 implied vol. I'm going to take 140 and I'm going to divide that by 16. 16 is about the square root of 252, which is the number of trading days in the year. Volatility is inversely proportional to time. Divide that by 16, that's an 8.7% move on any given day. We've moved about 6% today. So an 8.7% move on $146 stock, that's expecting to move about $12 a day. So this straddle actually, for a one-day move might actually be cheap. You never know though with these things. Really playing that short-term gamma type play, anything can happen. So we like to look at options that are a little farther out, give sort of more opportunities and chances for that volatility to realize. Path dependency will really matter here on those short-term plays. So what I want to do to kind of look at just how expensive this volatility is and think about how we might trade this. I'm going to look out to February, 64 days out. We've still got 113 implied vol. And I'm going to actually pull up a pretty classic option strategy right here. This is in many ways the strategy that people learn about first when they're coming to options, and that's a basic covered call strategy. So covered call strategy consists of buying 100 shares of stock. Maybe you already own them. Maybe you're an employee that has some stock. Maybe you've just been bullish on the company. It actually is really interesting because they gave out, shares to many of their longtime renters there. So, however you have acquired your Airbnb stock, maybe you're buying it on the open. For every 100 shares that you have, you would sell one call against that. And what this strategy does is it protects you on the downside to the extent that you've buffered your holdings with a little bit of cash. You collect the cash premium from the call. But on the upside, what it does is it will cap out your max gain at a certain level. So we really like to talk about trade-offs here at Harvested Financial and how important it is to understand what you are exchanging. That when you sell a covered call, you're not just getting income out of thin air. It's a trade-off. You're giving up some of that potential upside. But if the cash premium you're collecting is worth that, it can be a very lucrative trade. So we're looking at the February options here. So if I were to buy 100 shares of stock, so I'm going to add that in, but just look at how expensive some of these options are. And I'll pull up my annotator here. So I'm looking at this call skew. So, going from 145 all the way up to 175. This is just the effect that high volatility has on the market. So, the 145s are $26. The 155s are $23. So really, that's only a $3 premium difference for that $10 of additional stock room. $3 more for 10 more dollars, or I should say $3 less for 10 more dollars of upside stock. And we go all the way up to the 175s, and it's actually only $2 less. So that's what the effect of 113 vol will do. Those upside options are going to be distinctly very bid, and there's likely some upside call skew to this overall, where to the extent that people are betting on upside, it's a very common retail type trade to buy calls. Market makers are going to raise the price of those overall. So we are seeing some pretty beefy call prices right here that we can consider taking advantage of. So to the extent that I am interested in staying long Airbnb, I might pick a strike way on the upside. So, if I sell that 175 strike, I'm going to collect, 1990 on the offer. I've got 19 as my Theo. So assume I can get this trade off for a little under 19, 18 and a half would be an okay fill. The markets in here are pretty wide and relatively new stocks, so we can't always expect the same kind of execution quality that we might get in other places. But collect 1895 as the midpoint on this trade. And I'm going to buy right that with 100 shares of stock. So, the overall debit to enter this trade, which would actually be buying the shares that you have currently and selling the call, would be $126 a contract, or a contract exactly. So, for those 100, I should say per share. So 126 per share, times the 100 shares. So it's actually going to be a $12,000 outlay. But what it does is it offers you some really interesting risk reward profiles. So owning that stock now, you're buying the stock at 145, but by selling that call at around $19, you're buffering your downside all the way down here. So you break even with stock down, to 120, 126 really, because we're going to take the $19, take that off the 145, and it's really the debit that we pay for that trade. So below that 126 level, you actually have almost $20, well, $19, like we said, of protection that you gained from selling that call. Below that, your returns look just like stock. So the return of a stock profile looks just like that. It's sort of a straight line that for every dollar stock goes up, you make $1. For every dollar stock goes down, you're going to lose $1. So on the downside, your risk looks very much like stock risk in a covered call. But you also have that upside potential. So because we sold something so far out of the money, all the way up at that 175 line, we have room to run should this stock continue to rise. And we actually do quite well all the way up to 175. And then at that point, it caps off. So we've exchanged the benefit of Airbnb trading over 175 for that $19 today and the buffered downside protection that does get us. So really simple strategy right here. It's the benchmark option strategy, but it does provide some really interesting exposure, especially at these high volatility levels. So I mentioned that I wanted to pull up one of the trades that we were talking about the other week on Options Brew, and we will go through this again later this afternoon. I'd encourage everyone to tune in. Lex and I will be doing a afternoon midday market shot at 2 p.m. Central, 3 p.m. Eastern. So definitely check us out on Trader's YouTube channel and check us out on our Twitter for a link to the same. But real briefly, a little teaser of, like I said, we did this trade last week, and this was micro strategies. So in micro strategies, we were looking at a way to stay exposed to the potential upside and target our sweet spot if Bitcoin were to rise. So back then, Bitcoin was trading a little under 20,000. I believe it was around 19,000 when we started talking about it. We did some arithmetic to figure out just how much of MSTR's balance sheet was allocated to Bitcoin. It's a little less than 30%. They've been aggressively buying the coin, and they're really one of the main proxy plays here to get exposure to Bitcoin. So with the jump in Bitcoin, we simulated a rise to 23,000, which is almost exactly where it is at now. And we predicted that MSTR would be going up to 310. Right now it's trading right around 311. So really most of this rise is due to that percentage of MicroStrategy's market cap that is directly allocated to Bitcoin. So to the extent that you're interested in playing the equity option space with as a proxy play for Bitcoin, MSTR is probably one of the best opportunities. And we set up something here where we were going to be short the 310s. We were long the 290s, and we pulled in this 320. So this trade, these markets are relatively wide, but I will show you what the optimum setup for this is. And I'll pull out this a little bit wider. But because we're short the 310s, the best case scenario is when this stock goes right to that 310 level. To the extent that it continues to run, that's why we wanted to set up that broken wing butterfly, that if this does still have upside gas, we are going to benefit all the way on the upside, to the tune of $215 a contract. But what we really want to see in this strategy is, it's sitting right here. So to the extent that Bitcoin is going to sit right here around 23,000, highly volatile name, around 80 vol itself. So, certainly not certain, but that 310 level is right exactly where we'd expect to see MicroStrategies given the price action of Bitcoin today. So thank you guys for tuning in. There's a lot of really interesting option strategies out there, whether you're playing new listings, whether you're playing Bitcoin proxies, or maybe you're just interested in benchmarks. Our model portfolios here at Harvested Financial are all about benchmarks. So picking the broad-based names, staying exposed to the volatility risk premium, staying exposed to the equity risk premium, and generating option strategies that deliver returns for our clients. Like I mentioned, check us out on Twitter at harvested_DAFE. There's a nice little teaser in there about Tesla today and its inclusion in the S&P 500 and what that might do to volatility. So check us out. Thanks for tuning in. We appreciate everyone here, and we will see you again tomorrow.